Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm really pleased to have with me once again Greg Johnson. He is the president and CEO of Wellgreen Platinum Limited. This is a company that trades in Toronto under the symbol WG, symbol in the U.S. You can buy it there, as I have, under the symbol WGPLF. 93.7 million shares outstanding. Earlier today, when I glanced at the tape, it was 54 cents in U.S. money. Gives it a market cap of about $51 million. For those of you who are not familiar with Greg, he is, as I say, he is now the president of Wellgreen Platinum, but he has over 25 years of experience in the exploration and development of large-scale projects in the mining industry, and that's certainly what he is working on now with the Wellgreen project in the Yukon. He's raised over $650 million in project financing over the past, so it shows he's a serious player in this business. He was president and CEO of South American Silver during a period in which the company's market cap increased from $20 million to $350 million. And as a co-founder and executive at Nova Gold Resources, he was a key member of that executive team that led Nova Gold from a $50 million market cap to over a $2 billion company, and he oversaw the expansion of its resource base from over 30 million ounces of gold to over 30 million ounces of gold, I should say. And he began his career with Placer Dome, now Barrick Gold, holding various senior roles in domestic and international exploration in projects from early discovery stage to feasibility. And there's operations in Alaska, Canada, Africa, Australia, and Russia. So he's been around the mining industry around the world, and he certainly has a very strong academic background as well. So welcome, Greg. It's really good to have you with me again.
Well, thanks, Jay. It's a pleasure to be back.
You know, it really is a pleasure to watch Wellgreen Platinum. I maybe would like to start our conversation just very briefly with an overview of the Platinum Group metals. It seems to me, from what I see, and one of the reasons I took a real look at your company was because there aren't very many Platinum Group producers out there. South Africa, and it's having its problems with the miners and difficult mining conditions. Russia, I've heard rumors that Russia has even been out in the market buying platinum or palladium in the markets as well. But there's not much production coming from any other part of the world. So how does the platinum and palladium markets, how do they look to you right now?
Well, I think you've really highlighted, the situation in the PGMs, the Platinum Group metals, is really quite unique. I mean, most of the precious metals, if you look at gold, you look at silver, if you look at even the base metals, you see this kind of growing demand that goes along with population growth, and then the industry meets that demand each year by adding new mine supply. But the thing that's so striking about the Platinum Group metals is that the combination of the mine production, which is so concentrated in southern Africa and Russia, has meant that though demand has been increasing since the mid-'80s, particularly because of catalytic converter use, for clean air, we've seen mine supply actually peak in 2006 for platinum and 2004 for palladium, and that annual mine supply has been falling for the last 8 to 10 years in both those metals. So it's almost set up the perfect storm in terms of fundamentals, with an increasing need to improve to add demand in terms of catalytic converters for air quality reasons, particularly
Sure.
in the emerging world, and a lack of mine supply. And so it sets up a situation, though it's not apparent in the market of the last 2 weeks, which I think has primarily been a U.S. dollar strengthening situation. The fundamentals are, really about as good as they could be, with almost 1 million ounce of deficit production for each platinum and palladium in a total market that's 8 to 10 million ounces. Mm-hmm. So, that's 10% of global production each year that's chewing through whatever above ground stockpiles might be out there. Up until very recently, palladium was one of the top performing metals over the last year, and platinum likewise looked very strong fundamentally. And I know we've gone through a short, sharp correction in the sector, but I think longer term, the fundamentals are likely to bear out that we're likely to see higher metal prices, not lower, at least in the PGM space.
Now, it's interesting to note David Jensen, who's on our show, will be on again in the second hour of today's show, talks about the premium that is actually being paid in the Shanghai markets as opposed to the more paper-orientated markets here for platinum and palladium, and they've been as high as over 20%, I think, for palladium, and or something around that range. And part of that has to do with taxes, but a good part of that metal apparently is not coming in through the official sector is coming in the back door, given the lower prices here. But it certainly would suggest that the demand for platinum and palladium may be even stronger than what seems to be the case in the paper markets. But in any event, it does look to me that it's very, very bullish for platinum and palladium going forward. But I'd like to now turn to the other reason that I really wanted to get involved and purchase shares of your stock, and the reason that I also have you as a recommendation in my newsletter, and that is the project itself, the Wellgreen project in the Yukon, which I actually visited before you became the president of the company. That was back, I believe, in November of 2012. Can you describe some of the technical work that has been done roughly over the last 18 months or so that it's really, I think, really set this project up in a way that a lot of people, well, I've heard a lot of some criticisms from some of the professionals concerning some issues such as metallurgical, recoveries. Also, is there enough high-grade material to make this thing work? But can you talk a little bit about some of the technical improvements and breakthroughs that you've had that might shed this project in a stronger economic light than people might have viewed it before?
Yeah, no, I think your point is very good. And Jay, our team arrived, between 18 months and 2 years ago. So, over that period, the company has invested about $15 million into the ground in new drilling, as well as, new metallurgical studies that are going to form the basis for our updated economics that are going to be out here in the next couple of months. And when we all arrived, we recognized, Wellgreen was a very large system. Historically, it was developed as a high-grade underground mine by Hudbay, one of Canada's mid-size, copper base metal producers. Mm-hmm. It operated it for a few years as a high-grade nickel-copper PGM mine. And then in the 1980s, Robert Friedland picked up the project as part of this Galactic company. Mm-hmm. And that was the first time it was recognized that in addition to these high-grade, narrow zones, that there was, much broader mineralization that could be bulk mined. And so when our team came in, the first thing we looked at, we said, wow, it's a big potential resource. Of course, 95% of the resource at the time was the inferred category, which means mm-hmm. it's geologically reasonable, but mm-hmm. it requires additional drilling to prove it up. And so our work over the last 2 years has been focused on refining that geologic model, understanding so that we can properly correlate from zone to zone how those various geologic units correlate, and then using that information to tightly constrain a geologic resource and build the confidence level. And I can tell you that our advancement in that front is exceptional. We converted 75% of the previous inferred material into the highest confidence category measured and indicated resources. Mm-hmm. And that material represents proven and probable reserves once it goes into a pre-feasibility or a feasibility to really emphasize, the confidence in that. So mm-hmm. In addition to that, with the new discovery on the far east part of the deposit, we realized that we had a very large system, and we added about another 6 million ounces of new inferred material on top of that. So the combination of that conversion from inferred to the much larger measured and indicated component, along with adding the new inferred ounces in this big new discovery, was a huge step forward for the company. In addition, when we look inside of that resource, and this is one of the things that's a very, valid point to make about these large geologic systems, is that if everything that you have can only be mined on a very large scale because it's so low grade, mm-hmm. then it can make your economics challenging. The opportunity here at Wellgreen is that we have layers within the geology, and those layers are very predictable, they're very consistent, and those layers have increasing grades as we go from the north to the south in the deposit. And those layers come right to surface with those higher grades. And so within this large ultimate pit-constrained resource, we've got a higher grade resource, which is the focus of our mining optimization studies that are currently underway, that contains about 5 million ounces of inferred material and another 2 million ounces of measured and indicated material in that higher grade resource that is averaging about 2.5 grams per ton on a platinum equivalent basis. So for your listeners who are familiar with gold deposits, you're probably aware that deposits such as the Osisko mine, which was, the target of this hostile takeover recently from Goldcorp, is around a 1 gram average grade in a given pit.
Yeah.
So if you can move 2.5 gram or even 3 gram material into an open pit with similar economics, you can imagine that can be a very robust project and can have the kinds of numbers that investors, partners, financiers are going to be interested in taking a look at.
Yeah, for sure. And I guess this would be material that could be open-pitted, Greg?
The geometry of the deposit is such that we have a zone of higher grade material, which is on the western end of our deposit, and then we've got that higher grade material continuing down through the system into the far east. But it appears that we've got one or two of these starter pit areas that are going to come in that can have that are dominantly made of this higher grade material. And not only of the higher grade material, but they're also made, our analysis recently has delivered an assessment of all the both historic and recent metallurgical testing that's been done on the project over the last couple of years. And so we now have a much stronger level of confidence in addition to the resource, Jay, on the recoverability of these metals. And so what we're seeing is in these initial mine plans, not only are we getting the higher grade material, but we're also getting the best recovery type materials are coming into those early mine assessments. And so this is quite an exciting development. Go ahead.
Yeah, go ahead. No, you go ahead, Greg.
Yeah, I was just going to say that one of the things that we realized very early on as the team started to do its work was that a lot of work had been done historically on the metallurgy, and that work was representative of some of the various rocks on the deposit. But one of the breakthroughs we had was that in recognizing if we refine which rock type we're working on, we have a better chance to optimize the recovery. And as you pointed out in the introduction, this is a project that contains platinum and palladium and gold and nickel and copper, and you say, wow, all those metals, that sounds very complex. But in essence, what we have is we have just one or two what we call sulfide metals, and all of these metals together occur in those. So we have a dominant sulfide for nickel, we have a dominant sulfide for copper, and the PGMs tend to go along with the copper and the nickel. And so we can use a fairly simple and well-understood conventional method of crushing the ores, grinding them very finely, and then we use a process called flotation, which separates that sulfide metal-bearing material from the inert rock material and creates what's called a concentrate. And that concentrate is a very high-value product that can then be transported to a smelter. In our case, because we're right on the coast, in terms of our port, we would likely send this material to Asia, but there's a number of other smelters that could process this in Europe and North America and Australia.
Well, it certainly seems like a couple of the main concerns that I've had expressed on this show. In fact, Brent Cook was on here along with Eric Coffin and John Kaiser. The issue of, can you get an early get early high grade production that would enhance the economics of the project? Can you get adequate recoveries? And I guess we'll know more about that when you come out with your new economic assessment that's supposed to be coming out in another couple of months or so.
Yeah, the Q4 is our target, so before end of year. We're hoping that we may even see those numbers as soon as sometime in November.
So we could get a little better handle on the economics of it. One of the issues that I remember John Kaiser raised was, well, is this a nickel project or is it a PGM project? I guess how the balance is, current prices, how does it pan out? Is it more of a PGM or is it pretty balanced between nickel and the PGMs?
Yeah, it's actually very similar to if people are familiar with the copper space again. Many of those large copper deposits come with significant gold credits. For instance, the Kennecott operation in Utah, was for years the largest gold mine in the world, but it was a copper gold mine.
Yeah.
So you often get co-production of base metals and precious metals, and Wellgreen is the same. We will be producing platinum, palladium, and gold, plus significant nickel and significant copper, and depending on your price assumptions. But if we just take today's prices as kind of representative of what we might see over the life of the mine, it's roughly a third of the value is the PGMs and gold, a third of the value is nickel, and a third of the value is copper and cobalt. So depending on how those prices vary, if you're a precious metals bull, for instance, and you're a bear for base metals, this would be dominated by PGMs and gold. And if you're a real bull on the nickel and copper space, as many people, like Robert Friedland are, then, you can say there's going to be a huge amount of cash flow that's going to come in from that component. From our perspective, the company, we just see it as a great project. It's going to be a very significant producer of PGMs. Right now, based on the 2012 study, this could be the third largest producer of PGMs in the first world. And because it's an open pit operation, which 95% of the world's platinum and nickel production, for that matter, is from underground mines, our cost structure is much lower, and our ability to scale the operation up and increase very materially the production levels could make it so this rivals the Stillwater mine in Montana in terms of platinum production, with very nice credits coming in as co-products from nickel and copper.
Yeah, and just to give our listeners a sense of this, of the size of this project in terms of the ounces, I'm just looking at a table here that you have put out recently, Greg, that shows 2.5 million ounces in the measured and indicated category of platinum, a similar amount, 2.5 million ounces of palladium, nearly 500,000 ounces of gold. And then we look at the inferred category, we're looking at 6.4, 6.1 platinum and palladium respectively, and 1.3 million ounces of gold. And then you've got a lot of nickel and copper and cobalt as well. So it's truly a large project. Is on the upside, though, beyond that, not that you need that. I suppose those are probably adequate numbers to start to put together economics and project financing. But is that all there is, or is there more exploration beyond that?
Yeah, I mean, as you point out, it is a large system already. At 13.8 million ounces total in the inferred category, platinum, palladium, and gold, mostly platinum and palladium, and then another 5.5 million ounces in the measured and indicated higher confidence category. My reference point, anything that's more than 5 million ounces is world-class in scale. Your upper 1% of all deposits, ever discovered. So something of this scale is clearly, it shows already that it is a very large system. And yet, from a geologic point of view, what's exciting for our team, and I'm an exploration geologist by background, is that it's very early days at Wellgreen.
That's incredible.
Up until recent, years, this project was looked at as a high-grade underground target. So the ability to look at the disseminated material where the platinum and the nickel and the copper is just spread throughout the rock in these very consistent layers within the ultramafic geology is very exciting. It is completely open at depth. In fact, I would guess 10 or more of the very best drill holes ever drilled in the project have not yet had an offset hole drilled next to them to see how much further does the mineralization go.
Oh, it is really exciting. So what can investors look for as a catalyst that might draw some money into this market and cause these shares to rise a bit? What do you got the economics coming out in November? I guess that would be the next thing, right?
That's going to be the next, the big catalyst. But I think what this market right now is presenting is that investors who are out there and have been following the space and quality names, like Wellgreen, have an opportunity here with this short-term correction that we've seen in the sector, where I largely believe it's a function of U.S. dollar strength, not the fundamentals of these companies or the metals, to pick up names at incredibly cheap historic valuations and to get exposure ahead of what I think will be a rebound in the metal prices, and in our particular case, ahead of upcoming significant economic news in terms of this updated PEA. So I think for us, over the next couple of months and quarter, with the PEA coming out, the ongoing exploration work that will be part of the pre-feasibility studies in late 2015 or late 2014 and 2015, and then feasibility studies in 2016. I think we've got an exciting road ahead over the next couple of years. And if history is any guide, if we look at names like NovaGold and Ivanhoe, Detour Lake, and others that you probably have followed. I know you followed some of those names over the years.
Yep.
If we can have that type of revaluation that comes as you advance and de-risk your project towards cash flow and production, this type of opportunity is very exciting in terms of being able to see significant higher market valuations in the future as we do the kind of work we're doing. And one of the real advantages of the Wellgreen project is we're right next to a paved highway.
Yeah,
got and we didn't concentrate.
Right, and we didn't talk about there's some some exciting developments also in the energy space as well. Unfortunately, we're out of time, but we just talk real quickly about that. 30 seconds. Tell our listeners about energy.
Yeah, I mean, one of the things that in the mining space, the tried and true solution for these operations that are not directly on a power line has been diesel power. Yep. It's easy. It's well understood. What's been evolving in the Yukon over the last couple of years is the recognition of this abundant source of natural gas, particularly in Western Canada and now in Alaska, is a real asset. It's half the cost of diesel. It's the same technology, but it also burns much cleaner. And so we have signed supply agreements with two different suppliers, one based in Alaska, one based in Western Canada, that's currently the biggest producer of liquefied natural gas in Canada. Mm-hmm. And we are in position to be able to use LNG gas as our basically base case, and to have a kind of a green mine from the point of view of our energy. Mm-hmm. And we're quite excited about this, and this should have some very positive benefits in terms of the cost structure for us as well.
Yeah, it'll probably start to be factored into the PEA that comes out in November, I would imagine, right? So
yeah, we plan with these supply agreements to use it as our base case.
Very good. Well, we are out of time. I want to thank you very much. This is an exciting story. Thank you very much for sharing it with our listeners, Greg, and I look forward to doing it again sometime in the not-too-distant future.
I look forward to providing you an exciting update, Jay. Thanks a lot for having me.
Thank you very much.